Hi guys, I'm Lewis,
And I'm John.
and we're with American Homeland Title. So today we want to talk to you about Ohio real estate tax and related issues. So John, there seems to be a lot of confusion about Ohio real estate taxes. What do we need to know?
Well, there are several things we need to know about real estate taxes. I think first we need to know how to calculate real estate taxes. Real estate taxes in Ohio are calculated based on two numbers, the effective rate and the assessed value. The effective rate is based on the county budget and where the property is located at. There's nothing you can do to affect the effective rate. The assessed value is based on what the county assesses the property's value to be. The county does an appraisal at least once every 6 years with at least one midterm update. Some counties do it more frequently. But they take the value and they multiply it times 35%. That number is going to be considered the assessed value. If you take the effective rate times the assessed value, that's going to get you your real estate tax number. Then any special assessments will be added onto it, and that's actually how you calculate your real estate taxes.
So John, what if my taxes are too high?
That's a good question. As we said, the two numbers that factor into calculating your real estate taxes are the effective rate and the assessed value. There's nothing you can do to challenge the effective rate. However, the assessed value, there is a process that you can use, and it's called the Board of Revision complaint. From January 1st through March 31st of every year, residents in Ohio can file a Board of Revision complaint to potentially challenge the assessed value of their property. If successful, the value will be reduced, and in return, your taxes will be lowered.
So John, we do a lot of closings, and a lot of people are very confused about tax prorations.
Well, tax proration is confusing in Ohio. It all stems from the fact that real estate taxes are paid a year in arrears in Ohio. What that means is that during calendar year 2020, we're actually paying the real estate taxes due from calendar year 2019. So for example, if we were doing a closing on May 1st of 2020 on a real estate transaction, taxes would be prorated from July 1st of 2019 through May 1st of 2020. The reason for that is the first half taxes from 2019 should have been paid either in that January through March time period, and then the second half taxes wouldn't have been due yet. So even though the seller in that particular case would have paid all the taxes that are currently due, the second half of 2019 taxes haven't been paid. And obviously the first 4 months and 1 day of taxes in 2020 have not come due yet.
So what do the parties have to do differently about tax prorations?
Actually, nothing. What happens is the title company should handle all of that on the settlement statement. Once the closing happens, the seller should be obligated for no more taxes going forward. The buyer will pick those up, and in most cases, those are handled through an escrow account.
So John, is there anything else we need to be worried about with tax prorations?
Well, there's a couple other tricky things with tax prorations. First, tax prorations are based on the most recently available information. So if you have a newer parcel, maybe that parcel hasn't been fully assessed. Also, if you have new construction, maybe the structure on the property hasn't been fully assessed. So these can throw off tax prorations. If you know that you have a new parcel or newer construction, the tax proration should be handled within your real estate contract to make sure there's a fair proration between buyers and sellers. One last point, even though tax proration is customary, you can always put tax proration in the contract, and that can be a determining factor in your particular real estate transaction.
So John, can you tell me what it means to have a short tax proration?
Sure. Short tax proration is something that customarily happens in the Montgomery County area. Now that we have a merged Cincinnati Area Board of Realtor and Dayton Area Board of Realtor contract, it's actually a provision that is in the real estate contract. Short period proration is based on the idea that taxes are only 6 months in arrears versus a year in arrears. A short period tax proration benefits the seller and is harmful to the buyer. So if you're representing a buyer and you put short period proration, it's going to hurt your buyer. If you're a listing agent representing a seller, short period proration is going to help your seller. In essence, 6 months worth of taxes aren't being prorated between the two parties. If you are a buyer's real estate agent and you're representing a buyer under short period proration on a real estate transaction, it's important that this fact is identified to the lender. If the lender is unaware of the short period proration, the cash to close might be off when the lender is calculating the loan.
So John, is there any other considerations we should be concerned about with Ohio real estate taxes?
Yeah, there's a couple other points we should mention. First, if the seller is under a homestead exemption, that is a reduction in taxes for disabled people and 65 or older. Those are going to affect the tax proration between the parties. That is something that can be handled in the real estate contract. Also, if there's CAUV, that item needs to be handled in the real estate contract as well. If a property was in CAUV and it's no longer going to be CAUV, then there's going to be a recoupment, which could be significant. Whether who pays the recoupment, that could be buyer or seller, but typically that's handled in the real estate contract.
So guys, that about does it for Ohio real estate tax and related issues. You can always give us a call at American Homeland Title or visit us on the web at AmericanHomelandTitle.com.
Thanks for watching.